Good morning. This is Mary Ellen McGonagle, and you're watching the MEM Edge show. And this is the show where we put you in front of where the action is in the markets. So let's go ahead and take a look at what we're going to be reviewing today. First, of course, as always, we are going to take a look at the current market conditions, get a feel for where we are so you can have your game plan going forward for the week. And then I'm going to show you how you can spot where the strength currently is in the broader markets using preset screens on stockcharts.com. It's going to be important for you to know precisely where the biggest money flows are, where the strength is, and from there you can take action. And then also defensive areas that can help buffer earnings volatility. We are starting to see a pickup in the number of companies that are going to be reporting earnings this week, and oftentimes that can present volatility, certainly depending on the earnings results. And then also relevant stocks that are due to report earnings this week. These are going to be better known names that could potentially be market movers as far as impacting the rest of the markets, depending on their results. And then hopefully we'll have time to review some of these super oversold healthcare insurance stocks. For those of you that follow the markets closely, you might know that those stocks got hit terribly hard over the last couple of weeks. So helping you review a game plan as to potentially bottom picking, if you will, these stocks. So let's go ahead and get started. We want to go ahead and take a look at the broader markets. This is a daily chart of the S&P 500. And as usual, I have these moving average overlays. The green line is your 10-day simple moving average. Red is 50-day, blue is 200-day. So ideally, hopefully you can see that these broader markets are in a confirmed uptrend, finding support at this upward trending 10-day simple moving average. I've also overlaid on top the RSI. That's a relative strength indicator, and we want that indicator to not only be above this neutral or 50, but trending upward ideally, and we do in fact have that. So we have a positive relative strength indicator. Down here, stochastics, another momentum indicator. This is one that we also want to be above that net neutral 50 and then heading northward. So the stochastics are positive. Above 80 indicates overbought, but it can remain there for some time. We can go back historically and see that is the case. So overall, as far as a backdrop, the broader markets are presenting a bullish backdrop. So that is good news for those of you looking to put money to work. Let's go ahead and drill down a little bit further. What I want to do is show you where and how, among other ways, that you can get a feel for where the strength is in the markets by using that candle glance. This is available from that initial interface page. It is called Candle Glance. And what you can do is populate this view. It's showing you 12 different thumbnail snapshots with various indices. And so what I've done here is put in the broader market indices, the Dow, the S&P, the NASDAQ, and the Russell 2000, as well as S&P sector funds. And this is going to be really helpful because I've done technology, as well as consumer staples, financials, utilities, consumer discretionaries, real estate, and industrials. You can, of course, modify this to your liking, but from here, I've gone ahead and added that RSI. That's a relative strength indicator. What you can do is go ahead and add an indicator of your choice, but I like to know where the relative strength is. I sort that by descending. So we're seeing strength to weakness here is the view. So what we can see right away is consumer discretionary stocks. They are starting to come into favor, and they are positioned here in the forefront, followed by technology. Both of these are two of the sectors that are hitting new highs in price. From there, we go to the tech-heavy NASDAQ. But interestingly here, take a look. Consumer staples are up here in the forefront. And as many of you may know, this is normally viewed as a defensive area of the market, but we are going to get into some of the stocks and areas that are picking up in here. These stocks do offer higher yields, and they can be steadier in their movements. So if you are positioned with a lot of high growth stocks, it could be an ideal way to buffer your holdings. And then from there, real estate, another high yielding area of the markets. This is another sector that is hitting new highs in price. This is going to be your REIT stocks. And then financials. We certainly had a good week last week in these financial stocks. Industrial starting to pick up and so forth. Down here, lagging are these utility stocks, but we are seeing a little bit of a pickup there. And then this is the 10-year Treasury yield, and we are seeing a nice pickup here. This is Friday's gap up, and it's adding to that. It's actually a bit flat today, but we do want to see yields pick up a bit. That would, of course, help these financial stocks continue to do well. So, which would be good and better for the broader markets. So let's go ahead and take a look. I talked about using some of the preset screens here on stockcharts.com to help you uncover and filter out where the strength is in the broader markets. And this is important because and I'll show you a couple of ways that this strength is going to be revealed to you. So I'm going down here to reports and analysis tools. And what we are going to do is go to predefined scans. These are scans that have been already set up for you for easy access. And it's taking me to a new screen. Let's see if I can go ahead and exit out of that and go ahead and here we are, much better view here. So we're looking at these predefined scans. The upper portion here are bullish. Down here it gets a little more bearish as far as these indicators and these screens, what they are pointing you toward. Let's take a look. Now today there are 382 stocks that are currently hitting a new one-year high in price. Stocks that are hitting a one-year high in price are those that have gotten a lot in the way of money flows, and this is going to be where your strength is in the broader market. So let's go ahead and drill down. First, I'm going to view, because we have Toronto, London Stock Exchange, and so forth. I'm going to focus on U.S. stocks, and we're going to look at the NYSE, 170 stocks today where they are hitting a new high in price. So how can we utilize this to show us where the strength is? First way is go ahead and sort it by sector. This initial top portion is going to be a lot of ETF funds, but let's go ahead and drill down, and it's going to be alphabetically. So what we want to do is key in on those sectors that have a large number of stocks among them that are hitting a new high. So we can see immediately consumer services has a few names, but take a look at consumer discretionaries. That's a pretty healthy number within that group. From there, on the right side, it has the subgrouping of that particular stock. And from here, we are looking for themes, and we can see that restaurants and bars among these consumer discretionaries has the highest representation. So interestingly, from there, we can drill down to financials, and a number of these financials are in the asset management space, another area of strength here. So industrial showing up super strongly. This is a move into cyclical stocks that we've seen here recently. And then, of course, from there, you are looking for areas that have more than one stock within it. And we can see that, in fact, it is pretty diverse as far as the number, the areas that are hitting a new high. Aerospace defense is in there and so forth. Let's go ahead and drill down. Real estate, tons of REITs. I talked about that industry group hitting a new high. These stocks are the stronger ones within it. And then technology is in here. Now the NYSE is not going to have as many technology stocks as the NASDAQ, but we can see that software is well represented, as well as some of these computer services stocks. So very quickly, I'm going to take us back so that we can take a look at that NASDAQ and see where the strength is in these faster growing, a number of tech stocks. So again, by sector. We can actually sort this by industry grouping and very quickly assess where this strength is. These are the stocks that are hitting new highs. Take a look at this. Semiconductors very well represented. We can see software is in here as well. And then telecom equipment. So a lot of this is about this new 5G technology. A number of these stocks are in that space. So what we can do from here is go ahead and access the chart of that given stock. This is Cisco. Take a look at that strength. Very clear-cut uptrend. This is a daily price chart. The stock is a little bit overbought up here, but very much in a clear-cut uptrend. So assessing where that strength is, in fact, for those of you that might think the move is over, oftentimes these big winning stocks can go on for quite some time. Let's take a look. I mentioned that there are some companies that are due to report earnings this week. So we are going to want to be on top of that calendar so that in the event they do report, you'll want to have an eye out for it. One of the bigger names that is due to report this week is Netflix. And let's take a look. The stock has been deteriorating a bit going into their earnings. A lot of this drop is, for those of you that are not familiar, Disney came out on Friday and they announced their new streaming video service that's going to be offered. So it is designed to compete against Netflix. So the stock is getting hit on that. But the company is due to report their earnings tomorrow, and it is going to be all about new subscriptions. That's the number that investors are going to be keying in on. The CEO pre-announced they're looking for 8.9 million new subscribers. That's ahead of this time last year. They had 8 million new subscribers for Q1. So we will want to keep an eye on this for tomorrow, considering this is such a large cap stock, one of the FANG stocks. Let's take a look at some other stocks that are going to be reporting this week. Of course, we had JP Morgan Chase report on Friday. We also have other financial stocks that are going to be coming out with their earnings. This is BlackRock, BLK. They are a very large asset management firm. And I find this stock quite attractive in the sense that it's had this very significant downtrend in line with other financial stocks. But more recently, we are seeing a nice reversal of this downtrend. So once we break up above this 200-day simple moving average, as we did back here at the end of March, and we can marry that with a positive RSI. This is a daily price chart. I'm going to go ahead and expand this a bit so we can get a better feel. So we can see that that RSI is trending upward. And then down here, we have that MACD. We want to see that black line up through the red and also up above this 0. So we have that trending upward quite nicely. The stock is hitting a new 1 year. Actually, that is not true because we can go back here. This would be April, so we are below that, but we are certainly approaching it. And generally speaking, the stock does appear to be in an uptrend. They are also due tomorrow. The company offers a 2.9% yield. There is a company that came out with earnings today that is also in the financial space, and that's Charles Schwab, SCHW. And the reason I want to point this out to you is because this is another area of the broader markets that has been in quite a bit of a downtrend after peaking back here in March. Very, very heavy downtrend. The company came out with earnings today. They were actually quite positive, above estimates. Earnings and revenues were quite strong, and it is rallying. Let's take a look. It is actually now down about 0.5 point. Of a percent. It was up earlier on the news. And so what I was looking out for here, of course, was a downtrend reversal. In order for that to occur, the stock price would need to break up above this downward trending 200-day simple moving average. So we can go back here historically, take a look at other downtrend reversal attempts, and they are met with resistance as the stock gets lower. The resistance gets lower. So it found resistance here at a downward trending 50-day. So in this area here, it's giving a sense that it could potentially turn, but not the case. So again, that first step would need to be the price break up above that 200-day simple moving average. Then we will want to see these other simple moving averages break up above the longer term with a golden cross. Let's take a look down here. MACD did have that positive crossover, black line up through the red, but it's still below this net neutral zero. We will want to see it break up above. RSI just poking positively up above this net neutral. So a little bit of a mixed picture. We're not quite there yet. And then also this break, we would like to see that on volume. Let's take a look at some other stocks in that very same industry grouping that are due to report later this week. This is E-Trade. They're due to report on Wednesday. Very similar scenario. Peaked back here in May. So what is happening here with these investment brokerage, these platforms that allow investors to invest in the broader markets, they're seeing a pickup in activity, which of course helps their profit margins. They are seeing more activity as far as new to the table investors. So all of that is, of course, bullish, but however, the chart is telling us otherwise. This downtrend is still not reversed. I mentioned that we will want to see a break up above, but it could be pretty powerful if we do get these downtrend reversals in line with bullish reports, bullish earnings reports. One last name we can look at in this space that's due to report tomorrow. This is Interactive Brokers, IBKR. Again, very similar, peak back here in May, and really just languishing down here, all with an eye toward potentially breaking up. So if these guys do report tomorrow. Take a look at another name that's in the same space. This is Ameriprise, AMP. This is with an eye toward showing you what to look for as far as this downtrend finally being reversed. We had a little bit of a head fake here back at the end of February, but over here, it did become real, if you will, as far as that reversal. And AMP, just want to see when they actually did report. Yeah, the company reported back here at the end of January, and it did attempt to reverse, but more recently fell out of favor. But now we're back up. We can see this move here. This gap up occurred on very big volume, and we can see the moving averages short term up through the longer term. That's your golden cross, marrying that with the RSI and MACD. So that is what you will want to be on the lookout for, those stocks that we just reviewed that are due to report this week. One other area that I want to point out to you that's been really quite strong recently, and they are due to report. This is LVS, Las Vegas Sands. The stock is due to report their earnings on Wednesday. And this particular move, we can see that the stock peaked here back in July. A lot of this has to do, if you were to look, in fact, let's go ahead and take a look at MCHI, which is the China market. This is the Chinese ETF, Chinese stock market. Take a look, it peaked back here and dropped. So why would WIN move in tandem with that? Well, it's all about Macau and Chinese gambling. WIN has the largest market share, 34% of the Macau market share. So since the Chinese stock market and more recently, economic reports are pointing to positive rebound. We've seen a pickup in Wynn Resorts because with an eye toward a pickup in gambling activity over there. Let's take a look at another stock. Actually, LVS is what we want to look at. And it looks very, very similar. Let me rephrase this, because LVS is the company that has the largest market share in Macau, 34%. And these are the guys that are due to report on Wednesday. So from there, let's take a quick look at WIN. And what I want to point out with these guys, very similar as far as this downtrend reversal that's taking place. Wynn does not report until April 22nd, but they are also involved in Macau. They have the largest portion of the high rollers space. And for those of you not familiar, Chinese as a culture, they are very, very big into gambling. It's a very big pastime for them. It's very enjoyable. So Macau has been super popular as far as within the Chinese community and elsewhere. Let's take a look, because I talked about the Chinese stock market is picking up. There's one other stock that I wanted to point out that is not due to report, but they are in the Chinese, it's a Chinese-based company, but it is an ADR. So that is not easy to see. Okay, well, this stock has been really on quite a tear as far as they are a brokerage firm. And when we talk about Chinese gambling, we can certainly point to the stock markets. That's they view a lot of Chinese, a majority of them do trade much more actively than anywhere else in the world. It's viewed as a hobby and a pastime. So this is an intraday chart of TIGR, which has been a really fast-moving stock because they provide, they're the largest facilitator of U.S. securities for Chinese investors. So it's just taking that gambling theme one step further. So let's see, I did want to take a minute and review with you how you can use and utilize some of these defensive areas in the broader markets, again, as a way to buffer the inherent volatility that occurs with earnings season. So I'm taking you back to this initial interface page again. And what we can do from here is go ahead to this sector summary. And what you're looking at here is a view of today's action. Those industry groups, it's sort of by percent change. You can, of course, modify that. You can go out 1 week, 1 month. But let's go ahead, and in fact, 1 week is fine. We can go ahead into consumer staples. I talked about this being a defensive group. Those stocks that are within provide products that are needed regardless of any potential recession. So these are companies that are viewed generally as defensive. So once we get in here, we are now presented with the sub-industry groupings within consumer staples. So again, this is with a 1 week view. I'm not going to be so interested in tires or tobacco. I mean, we can certainly take a look, but more interestingly might be some of these food retailers, personal products, food products. These are going to contain some of your larger stocks. So what we can do once we are in here is go ahead and sort it by this scooter. This is the stock charts technical rating, and it will present you with those stocks that are the higher the number, the better. These are very technically sound stocks. So from here, you can go ahead and hover over that symbol, and it will present you with a thumbnail snapshot view. So a lot of these stocks are hitting new highs in price. We can take a quick look at some of these names, and you'll see how they are really powering to new highs. Pilgrim Pride is a meat products company, and they, from my understanding, are big in the chicken space. There's a lot of price improvement. Tootsie Roll, Treehouse, we can take a look at General Mills, GIS is the ticker symbol. So a lot of these are turnaround candidates that are really in confirmed uptrends and look quite attractive. Let's go ahead and drill down and see if we can present or identify a stock that is not so already hitting new highs. We're on the lookout for companies that could be a little bit earlier in their potential advance. So again, by go ahead and hovering over that ticker symbol, it'll provide you with a snapshot view. So let's take a look at Campbell Soup. Interestingly, I'm sure, but this particular one is a bit earlier in its advance and potentially just emerging out of this longer term base that takes us back to the end of November. A lot of these companies, these consumer staple companies, are cutting back on cost. They are cutting back on staff. They are presenting new products. Campbell, from what I understand, got out of the fresh food space, so they're cutting off non-performing areas, and they are starting to pick up here, as we can see. So that's certainly one area as far as picking up on defensive stocks. We can drill down into some of these other areas. This is the food, also consumer related. And we can, again, go ahead and sort it by scooter and drill down and take a look. Now, this Village Supermarket, this is a smaller stock, but they do a lot in the way of vitamins. And we can see the volume's not really there, but on the prowl for a potential turnaround. We're not quite there yet. Let's go ahead back and take a look at some of these other potential candidates. Casey's General Store. This is a company that is potentially poised to break out of a longer base. We can see, if we take a look at the stock going back to this period here at the end of February, and the stock is poised to potentially, that's going to take you to about 137. The stock yields about 1%. So I'm just going to go into one other defensive area, because I do want to touch upon those deeply oversold insurance providers and give you a feel for what to look out for there. So let's go ahead back within this sector summary, and we can go, in fact, not just consumer staples, but let's go ahead and take a look at some of these other areas that are generally viewed as more defensive. To go ahead into the into utilities. And the utility stocks on average yield about 3.3%, and that's as compared to the 10-year Treasury, which is hovering at about 2.60, 2.6%. So what we can do from here is go ahead into one of these sub-industry groupings. This is electric utility stocks. Go ahead and sort that by the stock charts, technical rating. And then from here, just again, hover over. We want to take a look at, there are some of you that would be fine getting into some of these stocks that have already had significant moves, but are in very clear-cut uptrends. And this is what we've seen in these utility stocks. They've had very significant moves going into the beginning of this year. This is about a 2-week period where these stocks fell out of favor. They pulled back, and they are just now breaking out of these 2-week base. So you can go into this utility sector. You'll see a number of these stocks that have a very similar pattern, very attractive. This is Southern Company. The stock has a 4.6% yield. Take a look at that RSI trending upward. Your MACD never got down below 0, but it did decline a bit with that pullback. But these MACD, the black line, is poised to bullishly cross up through the red. Okay, so moving on into some of these beaten down insurers, we can go ahead back to this sector glance and go into healthcare, and then from there into healthcare providers. Now, in this case, I'm going to go scooter lower the number. Let's see if we can, well, I'm just going to go ahead and drill down. And we are looking for these stocks that are in this area that have gotten really hit quite hard. We can, one name certainly is Anthem, ANTM. Take a look at this severe deterioration. We can see today, however, the stock is attempting to rally. So as an investor, you might be interested in potentially picking the bottom here. I will tell you it's not for the faint of heart, but I will guide you as far as one way to give you a feel that this stock could, in fact, potentially be reversing its downtrend. That's going to be looking at the intraday chart, and you will want to see this stock break back above. In this case, I have a 5 and a 13-hour moving average. You'll want to see this RSI break back up above 50, and then also your MACD. So we are way too early for that now. And then I'm going to have to leave it at that. But before I do, I'm just going to show you UNH. And using UNH an intraday 1 hour chart, go ahead back to this March period and the characteristics on that reversal and put that to work here. But we are way too early at this point. I'm going to leave it at that. For those of you trading, happy trading this week.